Alright guys, it's Tuesday, it's webinar day, and I'm here again. Okay, I got some papers to talk with you guys. I got 3 papers here. I was just before we started, I was in a live, in a call with one of my colleagues from London. I was like, oh man, what do you want? It's very late, you know, you have nothing to do. It's like, yeah man, it's too much things on the head. Let me talk a bit. I want to have your opinions in a few things. And we came up with very similar ideas from US dollar. And I want to share these ideas right now. As an analyst, as a, fund manager as well, you need to be on those networkings. You need to have, different aspects, different colleagues, different friends, different funds that actually build an idea with you so then you can trade. And I have this here. But first, subscribe to our channel, give us a thumbs up on this video, share this video with one of your friends, and then I see you tonight on the webinar. Please register. It's free, $0, no charges. The only thing I ask you is to register and be part of our Telegram community. Okay, that you can see the photos right here. All right, so I've talked to a fund manager. As I've mentioned to you guys, from London, he has more than $500 million under management, asset under management. So it is a very, very big fund, and he mostly runs convertible bonds as well as emerging markets on Forex. He has a position on USD JPY over 110 over now 150, and he is expecting USD JPY to 170. This is crazy, but he holds his views. Okay, so we basically talked that right now at this phase, the Fed matters more than any other central bank at this moment. Okay, and I sort of want to change and come back to a view that I had before, that I told that the central bank, the Fed, would raise the interest rates on 13th of December. I'm gonna reduce these probably 20% probability, okay? As we can see just here on the CMA, on the Fed Watch 2 from CMA, while 87.6 expect a pause again on 13 December, only 12.4 expect a rate increase. Okay, so why does the Fed matters the most? Well, basically, in summary, the Federal Reserve holds a much greater influence on the market than any other, okay? And most of the movements that is happening on US dollar at this moment are coming from weaker data from US. So that means that all the weakness is coming from US dollar is because of the weaker economic growth, weaker NFP that we had last week. So I don't think that we may have that stronger bullish US dollar anymore through Q4 2023 to Q1 2024. I'm turning dovish. I'm turning bearish on US dollar for the first time of this year. Wow, actually second time, but first time was a different view. We could make good trades. We had good trades on the bullishness of the US dollar, and now we sort of need to be a little bit more cautious towards that. But I do expect euro dollar to get a further move down to 105.6, 106, that level there, and then after that we may see a close year and close at 105. And then next year we may see a higher euro dollar. Same for the pound. I'm expecting a drop on GBP USD, and next year we see how we go. All right guys, so that's only a tiny bit of my analysis. As you can see, I have 3 pages. I've only talked about the first sentence here, the first paragraph here. And I'm more than happy to disclose all of these full analysis on my Telegram and on my webinar tonight. So don't waste your time, because if you're not registering yet, you are wasting time. You're wasting value that we are providing, free value for all of you right now, okay? So register free, and I see you tonight on my webinar. And please give us a thumbs up on this video, share this video with your friends, going forward this good content that we make in here, and make people informed as well on what's happening on geopolitics and macroeconomics. All right, guys, see you in the next video.